Hey, hello everyone, and welcome you to my YouTube channel. And I also welcome you to this particular video where I'll be giving free tips on how you can better your trading career. I love to drop videos once or twice a week. Just to help you guys. Give you guys tips on how you can actually better your trading for those who are interested in still becoming successful traders or taking trading as their career. So in this particular video I'll be showing you ways, or better to give you tips on how to avoid chasing negative trades, or better still, how to avoid chasing losing trades. Now, I want to thank you very much if you're in this. Just coming to my channel for the first time. I want to thank you. If you're in my Telegram group, I get the notifications anytime I upload the video, and I notify my Telegram subscribers. If you're there, thank you very much. If you just stumbled on me, maybe through searching on YouTube, I say thank you, whether from Instagram or anyhow you got to find me. I really appreciate, and I encourage you to subscribe if you like the content. Maybe if you like the content and you just wish to see more of it, I will indulge you to subscribe to this channel, so you can get more tips, so you can be notified anytime I drop a video like this. So I want to talk, as I said before, I want to talk about the importance of shutting down your losses, or better still, using a stop loss. Sometimes we get very good opportunities, and in the market, and you will make good use of it by making profit. But other times we might be in a very good trade, and the market will just go against us, and we go into the negative, or whether still results become red. For instance, let's say you have $300 and you're in a $1 trade, maybe $1 per pip trade, and you just stepped out of your house maybe for a couple of hours or a couple of minutes, depending, and you returned only to see that you are now down 50 to $100 in negative. Now, if you are in this condition and you don't know how to hedge, hedging means buying and selling at the same time. If you are in this condition and you don't know how to hedge, it's best to just close the trade. I repeat, if you are in this condition, you find yourself in this situation and you don't know how to hedge, it's best you just close the trade. For instance, if you okay, as I always tell my students and almost everybody that consults me, being in the negative, $75 in the negative for a $2,000 for a $2,000 account, like being in the negative $75 for a $2,000 account is less painful than being in the negative $75 for a $200 account. It all comes down to the account size. When you're in the negative $75 for a $2,000 account, you're about less than 5% of your account is actually is actually what you are losing at that point in time. But if you're in the negative $75 for a $200 account, you are about, I think, 40%, or let's say 35% in the negative of your account is already down. So you're comparing about 5% to 75%. To 35% is a huge gap, and it all comes down to the way we think. I'll advise you should have a good risk management or money management. As I tell my students, I always tell my students that with whatever strategy you actually so as I always tell my students, whatever strategy you're actually developing, it must tie down to your entry, your exit, and your money management. If the strategy is just tied down to your entry or your exit and not your money management, it will affect you in the long run. Or if it's just tied down to your entry and your money management and not your exit, if one of them is missing, it will affect you in the long run. Believe me, it will affect you in the long run. So the strategy must be tied down to your entry, your exit, and your money management if you really want to see success in that strategy. The first step to risk management is having an exit strategy in case this trade doesn't go in your favor. Now, as I tell people, it's not a must to use stop loss. I don't use stop loss all the time, but it's actually good, but it's not really a must. You can choose to trade without a stop loss if you can watch your trade. If you are not somebody that you don't have other things you are doing, you just trading full time, you can choose to trade without a stop loss, since you can actually watch the trade. But if you are somebody that have other things you are doing, you don't have that time to be you'll be watching the chart, then you can actually use the stop loss. So now when you lose a trade, it's best to just regroup and reset your mind, so your mindset would be in the right shape. When you lose a trade, it's best to just regroup, reset your mind, so your mindset will be in the right shape before actually thinking of going back to the chart. Don't try to revenge the market. Like, for example, if you bought and the market went down, don't try to sell and increase your volume so that you can get your money back. It's a very, 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 very effective way to get margin called fast. Don't try to revenge the market. The best thing to do after losing a trade is to analyze the market again carefully before deciding if you should enter again or not. Then ask yourself why the trade went the opposite direction. Was it news, or was my analysis just wrong? Shrink your chart sometimes. Shrink your chart. That way you can make a better choice next time. Like, if possible, shrink your chart like this, just to get a better view of what's actually going on, and so you can actually ask yourself, okay, could this be the reason why I lost this trade? When you shrink your chart, it gives you a better view of what is going on in the market. Now, so this is going to help you get better. When you lose a trade, just take a break, regroup, and get your thinking back in order before going back to the chart. It's best to look at the market with a sound mind than to trade emotionally, trying to get back what you lost. Don't try. Just best to just, after you lose a trade, just go do something else for a while, then come back and with a sound mind before you can begin to analyze the market again. Stuff like that before you can now be thinking of taking another trade. Now, another thing I want to say is that this is what I do. Sometimes if I'm in a trade and I have the strength in my account, like I have enough equity in my account to hold the losing trade, I'll hold it. And that is why I advise traders to give themselves 1000 pips before being margin called. Like, what I mean by that is that if you are trading a $200 account, you shouldn't be trading more than 0.02 lot size, or better still, 20 cents per pip. 0.02 lot size is 20 cents per pip for most pairs. I've told you guys that different pairs have different value per pip, but generally it's 20 cents per pip. Now, there are chances that it's not going to go 1000 pips before you realize you should close the trade. That is the logic behind having 1000 pip gap before stop out for the particular volume you are trading at. What it means that if you have a $100 account, you shouldn't be trading more than 0.01. If you have a $300 account, you shouldn't be trading more than 0.03. So that at least before you can be stopped out from a trade, the market will have to go 1000 pips against you before you can be stopped out. And you won't just allow the market to go 1000 pips against you. At least before it even goes 200 or 300 pips against you, you should know, okay, this is actually a bad trade, and you should think of getting out. You know, I just wanted to let you know this. I have strategies that I teach that can better your trading if you're interested. You know, I have hedging strategies that actually I'm going to be that I teach that could better your trading. If you're interested, you could just contact me. Though for now I'm not accepting any more students, but just keep in touch so that anytime I'm opening my mentorship group, then you could take advantage of it. So as I said before, if you are in a losing trade, try to just go out, take a break before you actually look at the charts again. It's just like if you're in a fight with your spouse. Instead of you to just stay there exchanging words, it's just better you just take a walk out of the house, because staying there might only cause you to make bad decisions, because he or she might say something that might get you angry or messed up, and you might just want to do something that you might regret doing. So most times, if you're um in a will I say, oh my god, in a fight, or in a just having an issue with your spouse, is what you normally do is just to go outside, take a break, and come back later to resolve it. And the same with forex. When you lose a trade, it's best to just go outside, do something else before you now come back. So look at the charts again and know where you went wrong, because staying there and trying to get your money back will only make you lose. It will only make you trade emotionally, which can actually lead you to lose your account. So the best thing to do when you are losing a trade and you don't know if it will turn around is to just close the trade and revisit it when you are in the right state of mind. Between this month and next, I will be teaching my students hedging strategies that they can use to recover losses and profits. And profits, that they can use to recover losses, and also in that way profit from the market, because we are in this to make money. No need to be trading if you are not making money. If you're not trading consistently and are not making money, you are constantly losing money in the forex market. You shouldn't be trading live, you should be trading demo. So if you are trading live, then I assume that you've traded demo, you've practiced a strategy, and you've confirmed that it works. But if you are not that kind of person, please be trading live, unless you have a very good signal service that you are following and you have a good money management to back yourself up. If not, please and please be trading demo. So thank you for watching. If you enjoyed the video, like it and also subscribe to my channel. If you didn't, what can I say? So thanks for watching, and I really do appreciate your time. Thanks for watching, and stay blessed. See you in the next video.